All right, diving into the world of crypto trading today. Specifically for you, it looks like you want to get a better handle on price movements.
Okay.
Some really interesting tools out there.
Yeah.
I see you've been looking into the Stochastic RSI.
Right.
We've got someone here who can help break that down, not just what it does,
Sure.
but like why it's so valuable.
Awesome.
I mean, we're talking like spotting market trends, identifying buy and sell signals, all that good stuff.
That's exciting stuff.
Before we get to the Stoch RSI itself,
Okay.
let's start with the foundation, the RSI.
Yeah.
Can you give us a quick rundown on that?
Absolutely. So the relative strength index, the RSI, it is a momentum oscillator.
Okay.
So it measures the speed and magnitude of price changes to evaluate overbought or oversold conditions.
Gotcha.
It's displayed as a number between 0 and 100.
Okay.
When the RSI is above 70, it's generally considered overbought.
Okay.
Conversely, an RSI below 30 suggests the asset may be oversold.
So it's like a temperature gauge to tell us when things are hot or cold.
Yeah, that's a good analogy.
Okay.
Traders use the RSI to get a sense of whether the current price momentum is sustainable or if a reversal might be on the horizon.
Interesting.
Yeah.
So how does the Stochastic RSI build upon this?
Right.
I see you've got some charts pulled up.
Yes.
What's different about the Stoch RSI?
Stoch RSI, while derived from the RSI, it takes a different approach.
Okay.
Instead of simply measuring price changes, it looks at the RSI's value relative to its own high-low range
Okay.
over a certain period.
Gotcha.
Think of it as a way to kind of gauge the RSI's internal momentum.
So like momentum
Yeah,
of the moment.
Exactly.
Okay.
The Stoch RSI provides a more sensitive reading compared to the standard RSI,
Okay.
and it fluctuates on a scale of 0 to 1.
Okay.
And similar to the RSI, readings above 0.8 are generally considered overbought,
Gotcha.
while readings below 0.2 suggest oversold conditions.
Okay.
This heightened sensitivity makes it particularly useful for identifying potential turning points in price.
Yeah. I'm seeing two lines on the Stoch RSI chart here.
Right.
What is the significance of those?
Yes, the classic Perquet and Percy D lines.
Okay.
They're the heart of the Stoch RSI.
Okay.
The Perquet line, which is the faster one, represents the current value of the Stoch RSI.
Okay.
The Percy line is a moving average of the Percy line, smoothing out those rapid fluctuations and providing a more stable trend indicator.
So the Perceived is like our quick sprinter reacting to everything.
Exactly.
Percy is like our marathon runner.
Yes.
Just kind of steady.
Exactly.
Okay.
By analyzing the interaction between these two lines, traders can gain valuable insights into potential shifts in momentum.
Okay, that's helpful. But how do these lines translate into signals?
Right.
Like what should we be looking for?
So there are several key patterns to watch for.
Okay.
First, pay attention to those overbought and oversold levels we talked about, above 0.8 and below 0.2 respectively.
Okay.
Now, just because the Stoch RSI hits those levels doesn't mean an immediate reversal is guaranteed. You need to consider the context.
Okay.
Is the overall trend strong?
Gotcha.
Are there any fundamental factors supporting the current price move?
Okay.
So it's like using the Stoch RSI as a compass, not a roadmap.
Gotcha.
It's going to point you in a direction, but you still need to navigate the terrain.
So using it with other signals?
Yes.
Okay.
And doing your own analysis,
Makes sense. Now, what about the crossovers between the lines?
Right.
How do those factor in?
So crossovers are where things get really interesting.
Okay.
When the Perquet line crosses above the Percy line, it can signal a potential bullish shift in momentum, suggesting a buy signal.
Gotcha.
Conversely, when the Percenque crosses below the Perceived, it may indicate weakening momentum,
Okay.
potentially signaling a sell signal.
Gotcha.
Again, we want to consider these crossovers in relation to the overall market context.
Okay.
For instance, a bullish crossover in the oversold zone carries more weight than one occurring in the middle of the range.
So location matters.
Location matters.
Okay.
A crossover near those extremes.
Yeah.
The overbought or oversold zones
Yeah.
is a stronger signal.
Okay.
It's like getting a confirmation signal from multiple sources.
Gotcha.
The Stoch RSI reaching an extreme level suggests potential for a reversal,
Yeah.
and the crossover provides further validation.
Okay.
It's all about looking for those confluences to strengthen your trading decisions.
This is fascinating stuff.
Yeah.
But you know what else blows my mind?
What's that?
It's not just about those short-term price swings.
Right.
I've heard traders using the Stoch RSI to get a grasp on those larger market cycles,
Yeah.
spotting, bull and bear market turns.
Exactly.
How does that work?
That's where we start to see the Stoch RSI's true power,
Okay.
especially when we analyze it on longer time frames.
Gotcha.
Imagine those two lines, the Percenque and Percy, consistently hovering in the overbought zone for an extended period,
Okay.
say on a weekly or monthly chart,
Okay.
that can be a sign of a weakening bull market.
Conversely, if they linger in the oversold zone for weeks or months, it could signal a potential bottoming process for a bear market.
So it's like zooming out,
Getting the bird's eye view.
getting the bird's eye view of the market.
Exactly.
I've got it.
The Stoch RSI can be a valuable tool for understanding whether the market is losing steam or starting to regain its footing.
Okay.
It's especially potent when you combine it with other indicators and your own fundamental analysis.
This is all starting to click into place.
But
I can already see why you call the Stoch RSI a price speedometer for crypto.
For crypto.
But let's get even more specific.
Okay.
How can our listener use this tool to pinpoint
Right.
those major market tops and bottoms?
It all comes down to those crossover signals.
Okay.
But with a twist.
Okay.
Let's say we're looking at a weekly chart.
Okay.
And the Stoch RSI has been in the overbought zone for several weeks.
Gotcha.
Now, if the person K line crosses below the persine near that overbought level.
It can be a powerful signal that the bull market is losing momentum.
Okay.
And a reversal could be imminent.
Okay.
This doesn't mean the price will plummet overnight,
Okay.
but it's a warning sign that the party might be coming to an end.
So it's like seeing that first crack in the foundation.
Exactly.
It's a sign that things might start to crumble.
That's a good way to put it.
Conversely, let's say we're in a bear market.
Right.
And the Stoch RSI has been down in the oversold zone for weeks on that same weekly chart.
Right.
If the per K line crosses above the per DD near that oversold level, it could suggest that selling pressure is weakening.
Exactly.
And a potential bottom might be forming.
Exactly.
Again, this doesn't mean we're about to blast off to the moon.
Right.
But it can be an early indication that the worst might be over.
Exactly.
That makes a lot of sense. And I'm sure our listeners are starting to see just how powerful these signals can be.
Yeah.
We've only scratched the surface here in part 1.
We have. There's a lot more to cover.
A lot more to cover.
A lot more to cover.
We'll be back with part 2 soon.
Absolutely. So we covered a lot of ground in part 1.
We did.
From the basics of momentum and the RSI to how the Stoch RSI offers that. More nuanced view really adds a layer of depth to your analysis.
Absolutely. And those crossover signals, near the overbought and oversold levels.
Yes.
That's powerful stuff.
Yeah, definitely.
I'm starting to see why so many crypto traders swear by the Stoch RSI.
It's not about blindly following the signals, though. The Stoch RSI is most effective when you use it as part of a holistic approach.
Gotcha.
So I'm talking about combining it with other indicators, understanding chart patterns, and always considering the broader market context.
So it's not a magic bullet.
It is not a magic bullet.
But it's a tool in the toolbox.
It's a valuable tool in the toolbox.
Gotcha.
Let's say the Stoch RSI is flashing an overbought signal on the daily chart for Bitcoin.
Okay.
Does that automatically mean it's time to sell? Right.
Not necessarily.
Okay.
If we zoom out and we see that Bitcoin is in the middle of a strong uptrend on the weekly chart.
Gotcha.
That overbought signal on the daily chart might simply represent a pause before the uptrend resumes.
So that's where understanding those different timeframes comes in?
Yes, exactly. Those longer timeframes give you that crucial big picture perspective.
Gotcha.
They help you distinguish between a short-term pullback within an ongoing trend and a potential reversal of the larger trend.
Okay, this is giving me a much clearer understanding of how to approach these signals.
Awesome.
Are there other technical indicators that work particularly well in conjunction with the Stoch RSI?
Absolutely. One classic pairing is the Stoch RSI with moving averages.
Okay.
For instance, you could plot a 20-period and a 50-period moving average on your chart alongside the Stoch RSI.
Okay.
When the price is above both moving averages and the Stoch RSI generates a bullish crossover signal, that could be a strong confirmation to enter a long position. So you're looking for alignment between the Stoch RSI, those moving averages, and the price action itself.
Exactly.
Okay.
Another potent combination is using the Stoch RSI with Bollinger Bands.
Okay.
Bollinger Bands are a volatility indicator.
Okay.
Essentially plotting standard deviations above and below a moving average.
Gotcha.
When the price is squeezing towards the lower Bollinger Band, and the Stoch RSI is showing oversold conditions, that could present a compelling buying opportunity.
So the Stoch RSI helps confirm those potential bounce plays
Precisely.
off the lower band.
It's all about looking for those confluence points
Okay.
where multiple indicators are painting a similar picture.
Okay.
This helps to increase your confidence in your trading decisions.
Okay, I'm starting to see the real power of combining these tools.
Yes.
But we can't forget about fundamental analysis, right?
Absolutely not.
Right.
The Stoch RSI can give you insights into momentum and potential turning points.
Yeah.
But it's essential to understand the underlying story.
Gotcha.
Driving the asset you're trading.
Okay.
For example, let's say the Stoch RSI is flashing a bullish signal for Ethereum on the daily chart.
Okay.
But then you dig into the fundamentals.
Yeah.
And you discover that a major upgrade is facing delays.
Okay.
Or regulatory concerns are mounting.
Okay.
That's valuable information.
Yeah.
That might make you think twice about jumping into a long position.
So using the Stoch RSI to time your entry and exit.
Yeah.
But remembering that fundamentals drive those bigger moves.
You got it.
Okay.
It's like having a great set of tires on your car.
Yeah.
You still need a good engine to get you where you want to go.
That's a great analogy.
Now let's dive into some specific trading strategies using the Stoch RSI.
Perfect. I'm ready to get tactical.
One popular strategy is called divergence trading.
Okay.
Divergence occurs when the price action and the Stoch RSI are telling different stories.
Okay.
For example, let's say the price of Bitcoin is making a new high. Gotcha.
But the Stoch RSI is failing to reach a new high.
Okay.
This is called bearish divergence.
Oh.
It can be a warning sign that the upward momentum is weakening.
So it's like the price is putting on a brave face,
Yeah.
but the Stoch RSI is whispering.
Exactly.
Something's not right.
Something's not right.
Okay.
Bearish divergence often precedes a price reversal.
Gotcha.
The opposite is also true.
Okay.
Bullish divergence occurs when the price makes a new low.
Okay.
But the Stoch RSI fails to make a new low.
Okay.
This suggests that selling pressure might be easing.
Okay.
And a potential reversal to the upside could be in the cards.
Divergence trading sounds powerful.
It is.
But it also seems like it requires a keen eye.
It does.
To spot those discrepancies.
It does take practice.
Oh.
But with experience, you'll start to recognize those divergence patterns more readily.
Gotcha.
Another strategy you can employ is using the Stoch RSI to identify overextensions within a trend.
Okay.
Let's say Bitcoin is in a strong uptrend and the price pulls back slightly. Okay.
Now, if the Stoch RSI dips into oversold territory during that pullback, it could signal a buying opportunity for those looking to ride the continuation of the uptrend.
So you're using the Stoch RSI to identify those moments when the pullback is like overextended and a bounce back to the upside is probable.
Exactly.
Okay.
This strategy is all about capitalizing on those short-term fluctuations within the context of a larger trend.
I can already see how these strategies could be applied across different time frames.
Yes, the principles are the same.
Okay.
Whether you're a day trader looking for quick scalps or a swing trader riding those intermediate term swings.
Speaking of real-world application, I know a lot of crypto traders are interested in using the Stoch RSI to navigate those legendary Bitcoin halving cycles.
Absolutely.
Can you shed some light on how this tool can be helpful in that arena?
Absolutely. So Bitcoin halving cycles, those moments when the rate of new Bitcoin creation is cut in half have historically been major catalysts for price volatility and significant bull runs.
Okay.
The Stoch RSI can be a very valuable tool for understanding where we are within those cycles.
Okay.
For example, some traders believe that major market tops tend to occur when the Stoch RSI on the weekly or monthly chart shows bearish divergence during a halving cycle.
So they're looking for those warning signs that the momentum is starting to crack.
Exactly.
Even though price might be making new highs.
Precisely.
Okay.
Conversely, some traders look for bullish divergence on the Stoch RSI.
Okay.
During the depths of a bear market following a halving cycle,
this
could signal that a bottoming process is underway. And a new bull market is about to emerge.
This is fascinating stuff.
It is.
It's like having a secret decoder ring. For those halving cycles.
It's not about predicting the future. But it's about understanding the historical patterns. And using tools like the Stoch RSI to gain an edge. Remember, no indicator is perfect. And the Stoch RSI is no exception.
We need to be aware of its limitations as well.
Exactly. In Part 3, we'll explore some of the potential pitfalls and challenges of using the Stoch RSI. We'll also discuss how to integrate all of these concepts into a practical trading plan.
Welcome back. Really starting to see how the Stoch RSI can be a game changer for crypto traders. Especially with those Bitcoin halving cycles. It's like having a roadmap.
Powerful tool, no doubt. Like any tool Important to use it wisely.
Right. We can't just blindly follow it.
Right, exactly.
What are some of the pitfalls?
Yeah, so one common challenge with the Stoch RSI, and really any momentum oscillator, is the potential for false signals, particularly in choppy or sideways markets, when the price is just bouncing around without a clear direction. The Stoch RSI can generate a lot of whipsaws, triggering overbought or oversold readings that don't actually lead to reversals.
So it's like you think you've spotted the trend? Yeah. But the market's just zigzagging.
Exactly.
Yeah.
So that's why it's crucial to use the Stoch RSI in conjunction with other indicators. And to always consider the overall market context.
Right.
Are we in a trending market?
Yeah.
A range-bound market?
Gotcha.
What's the sentiment among traders?
Right. You gotta look at everything.
You gotta look at everything.
Okay, so it's about being a detective.
Be a detective.
Piecing together all the clues.
All the clues.
What about those settings?
Right.
Is there a risk of getting too caught up in trying to find that perfect parameter?
Yeah, there's definitely a temptation to over-optimize. Traders often spend hours tweaking settings, trying to achieve perfect historical results.
Right.
But remember, the market is constantly evolving.
Yeah.
And what worked in the past might not work in the future.
So it's like chasing a moving target.
It is.
The market always has a way of throwing curveballs. All right, so focus on the big picture.
Big picture.
Not the tiny tweaks.
Exactly.
Now, let's talk about risk management.
Okay.
Crucial aspect of trading.
Absolutely.
No matter what indicators you're using.
For sure.
How can our listener incorporate the Stoch RSI into a solid risk management plan?
One key principle is to always use stop-loss orders. A stop-loss order is essentially a safety net that automatically exits your trade. If the price moves against you by a certain amount.
Gotcha.
When using the Stoch RSI, you could set your stop-loss order just below a recent swing low if you're going long, or just above a recent swing high if you're shorting.
So you're using those price levels
as reference points. For where to place your stop loss.
Limiting your potential downside.
Exactly.
All right.
It's all about protecting your capital. Avoiding those catastrophic losses that can wipe out your account.
Makes sense.
Another important aspect of risk management is position sizing. This refers to how much capital you allocate to each trade.
Gotcha.
A good rule of thumb is to never risk more than 1 to 2% of your total trading capital on any single trade.
So even if you're super confident?
Even if you're super confident.
We're still limiting your exposure.
Absolutely. It's about preserving your capital for the long haul.
Right. Trading's a marathon, not a sprint.
Exactly.
Love that analogy.
Now let's bring it all together.
Okay.
How can our listener actually implement the Stoch RSI into a practical trading plan?
Yeah, how do we do it?
First, you need to define your trading style.
Okay.
Are you a day trader, a swing trader, or a long-term investor?
Right.
This will determine which time frames you focus on.
Okay.
And which strategies you employ.
So it's about finding the approach that aligns with your personality and goals.
Exactly.
Once you've got your trading style figured out, you need to establish a set of rules. For entry and exit.
For entry and exit. These rules should incorporate the Stoch RSI, along with other indicators and your own fundamental analysis.
So again, looking for those confluence points.
Confluence points.
Where the signals are aligning.
Exactly. And equally important, you need to define your exit strategy.
Okay.
Will you exit based on a specific price target?
Gotcha.
A trailing stop-loss order, or a change in the Stoch RSI reading?
So it's about having a plan.
Have a plan.
And sticking to it.
Sticking to it.
Not letting your emotions get the best of you.
Exactly.
Yeah.
And finally, remember that trading is a continuous learning process.
Okay.
Don't be afraid to experiment.
Yeah.
Track your results.
Keep learning.
Keep learning and refine your approach over time.
Awesome.
The more you understand the nuances of the Stoch RSI and how it interacts with the market, the better equipped you'll be to navigate those crypto waves and ride them to success.
This has been an incredible deep dive.
It has been fun.
Really appreciate your insights.
Of course, happy to be here.
I feel like I've gained a whole new level of insight into the crypto market.
Well,
now that I have this price speedometer, I'm ready to uncover those hidden gems in the crypto market.
Yeah.
Thanks for joining us.
Absolutely.
Happy trading, everybody.